Hello, welcome back to this week's market update. Today is April 1st, 2024, Monday morning, and we had a very full week as well as the close to the month of March. So we'll jump right in. Looking at last month's market performance, we had another bullish month, overall continuing the uptrend we've been seeing since about late October, early November of last year. We had the S&P 500 up 3.18% in the month. The Dow Jones Industrial Average actually overtaking the NASDAQ this month, up 2.12%. The NASDAQ closely following, up 1.86% on the month, and even the Barclays Ag being generally flat throughout the month, but then rising ultimately 0.6% in the month of March. One of last week's biggest data points that we got was the PCE inflation report that the Fed somewhat leaked actually during their Fed meeting earlier on in March, but we saw PCE inflation sit at 2.5% for the month of February, which was up slightly from January's 2.4%, as well as core PCE at 2.8% from a year ago, and that was down slightly from January's 2.9% inflation rate. On the other hand, both rose at monthly rates of 0.3% from January to February. So overall, a very mild inflation reading, although we had seen a slight uptick in this headline PCE number, but that was also prefaced by a slightly hotter than expected February CPI report on that headline annual number. So investors were pretty much primed for that to be a little bit hotter than expected, but overall, the inflation report shows, this continuation of the downtrend of inflation. Alongside the personal consumption expenditures inflation report, we also get great data on personal income, spending, and saving for the same month. So in the month of February, we saw personal income rise 0.3% month over month, which was slightly lower than what was expected. Then when you look at after tax, the disposable personal income, that rose 0.2%, slightly lower, obviously, because it is after tax. Then personal outlays, personal spending was up quite a bit, much more than what was expected at a gain of 0.8% month over month from January to February. And ultimately, when you increase your earnings slightly, but you increase your spending even more, then personal savings suffers. So that fell from about 4.1% in January to 3.6% in February. Another really interesting data point from last week was that the new home market is quite near a bear market. So typically, a bear market is when the price of a certain asset drops by 20% from peak to trough. So in the February new home sales data, we saw fairly normal volumes that met expectations at around 662,000 new homes sold in February. However, the median sales price fell 3.5% in just January to February alone. So that continues this downtrend that we've seen. Up here, you can see the median sales price of a new home was near 500,000 at a price of 496.8K per a median home. Now the median home is just above 400K at $400,500 in February of 2024. So from here, peak to trough, that is down 19.4%. So essentially 1 month of data or one slight downward revision could put the new home sales market into an official bear market. Moving along through this week's data, we also got durable goods orders for the month of February. They rose 1.4% month over month, and that was led by a jump in transportation equipment orders, which rose 3.3% in the month, which also was rebounding from the previous 2 months of negative month over month declines. On the other hand, we saw January's figures revised down from negative 6.1% to this negative 6.9%. So quite a big revision down in the first month of 2024. So overall, durable goods orders continues to show some weakness in the manufacturing industry, and we'll continue to keep an eye on it. Last week, we also got the Consumer Confidence Index for the month of March, and it was generally flat month over month from February to March from 104.8 to 104.7. So down ever so slightly, but essentially flat. However, in the responses to the index, we saw a few changes in respondent sentiment. So while there was a small improvement in consumers' assessment of current economic conditions, there was also a growing sense of pessimism regarding future economic conditions. So quite notable there, it was, current economic conditions kind of settling pretty well, while future economic conditions might be a little bit shakier ahead, according to the respondents in this survey. Also notable in the survey, respondents, consumers over 55 years of age, were increasingly optimistic about the economy, while those under 55 showed a decline in confidence. So, just how demographics can really have a large impact of perceptions of the economy. One final update from last week, we saw multiple upward revisions in some economic data showing stronger than originally expected results. So, first in real GDP metrics here, that got revised up from 3.2% growth in the fourth quarter of 2023 to 3.4%. So, that's obviously great news there, stronger than expected economic growth. And also on the University of Michigan's Consumer Sentiment Index that got revised up quite a bit from 76.5 to 79.4. So better than expected GDP growth as well as better than expected consumer sentiment. Thank you for tuning into our market update this week, and we look forward to seeing you next week. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.